Now, there's a lot of panic about the new Nigerian Tax Act of 2025, which is supposed to kick off 1st of January 2026. First, let me debunk some misinformation. Number one, your bank account will not be automatically deducted. It is expected that you present your earnings to the what will now be named the Nigerian Revenue Service from next year, as it has always been done. Then all transaction must have description. That is also false. Then another one I've been hearing a lot is that money in your bank account could be automatically taxed. That is not true. You have to declare your taxable income and present your tax to the Nigerian Revenue Services. Now, this whole situation is divided into three main components. Number one is the personal income tax. Number two is the corporate income tax, and number three is about the VAT. So I'm just going to explain the personal income tax and the corporate income tax. Now, first of all, for the personal income tax, what is new is that there is now tax exemption for people who earn less than 800,000 per annum. So if you earn, say, 3 million, first of all, the first 800,000 naira is not taxed. Then the remaining balance from there is where they do the math to get your taxable income. Let me do a quick comparison. Now, this is a tax calculator authorized by the Presidential Fiscal Policy and Tax Reform Committee. Now, let's use an example of somebody who earns 800k a year or 800k per annum. How does it work? National minimum wage earners exempted from tax. So this person, according to this new law, this person is not supposed to pay tax. But according to the previous law, this person, first of all, is going to get a relief of 160k. Then consolidated relief allowance, which is now being replaced in the new law with rent allowance. This is what the person is going to get. At the end of the day, from that 800k, the taxable income would have been 440,000. Then at the end of the day, this person is expected to pay 36,400 in total for tax for that year. Then in this new law, that person is exempted. This is the comparison table. You get. So if you are somebody, let's use another example of somebody who is earning 2 million per annum. Then let's say this person is paying around 500k for rent. Now, mind you, with this new tax law, the rent relief you get, it's capped at 500k. That's one. Then it is also supposed to cover, they are going to cover, or they are expected to cover 20% of whatever your rent is. So if your rent is 500k, like this example I'm using, 20% is going to be 100k. 100k is going to be deducted from your annual income before is now being calculated for your taxable income. So let's see. First, let's go through the old law. Under the old law, from your 2 million, you get a relief of 20%. Then you get a consolidated relief allowance of 200,000. At the end of the day, you have 1.4 million as your taxable income. Then inside that 1.4 million, starting from 300k, you pay 7%. So if you are somebody who earns 300% per annum, that is where you start to pay tax, according to the old law. Then after your first 300k of 7% tax, the next 300k you make, you pay 11%. The next 500k you pay on and on and on till 24%. So for this 2 million naira example, your taxable income is 1.4 million, and at the end of that 1 year period, you'll be paying 186,000 naira as your tax. That is the old tax law. But with this new tax law, the only deduction you're getting is your tax rent relief. Removing that 20%, you'll be left with 1.9, which will now become your taxable income. Then from this 1.9, Your first 800k is tax free. After that 800k, the next funds you're getting will be taxed at 15%. So at the end of the day, you've been paying 165,000 naira for your tax. Now, this is the comparison table. You are still paying a little less with this new tax law. Now, the primary purpose of this new tax law is to tax the high income earners. Now, let's now use an example of somebody who earns around 2 million and 20 million per annum. Just add another. Yep. So somebody who earns around 20 million per annum, let's now say that person is paying a rent of 1 million naira a year. We're just giving estimates. We're just giving examples. So let's run it through and compare with the old law again. So with the old law, you get a personal relief of 20% and consolidated relief allowance of 200k. At the end of the day, your taxable income would be 15,800,000. So still the normal percentage as it progresses, and at the end of the day, you'll be paying a total of 3.5 million for tax per annum. Compared with the new law, your tax will start from after you've been tax free on your first 800k, and at the end of the day, you'll be paying a total of 3.5 million naira. So it's still very, very close, less than 300 naira difference per month on your payment. So if you need this calculator, just comment in the comment section tax calculator, and I will personally DM you the link to this tax calculator. So that is basically the comparison between the new tax law and the old tax law. So what do you do as someone who is earning a little bit high and you're supposed to pay a little bit more according to the new tax? This is where it is now very important to register your company as an LLC, a limited liability company. Now, when you register your company as a limited liability company, LLCs have a tax exemption according to this new tax law of 0% for companies that make less than 100 million per annum, or they have a total assets value of around 250 million naira. So if you are somebody who's a freelancer, or you don't work under anybody directly, you're just self-employed or have a small business, you should register your company as an LLC, then put yourself on a salary. That is where is most important. When you put yourself on a salary, you now get taxed based on your salary as personal income, not your company directly. So when you do that, you now pay, let's say your business or whatever business you're running, you earn around 20 million and you pay yourself say 2 million per annum. You will now be taxed based on what is taxable inside that 2 million after your rent has been removed and every other due process has been taken. You get? So in order for you to be sane or enjoy this entire new tax policy, you just have to follow due process, ensure you have records so that you can qualify for exemptions when it is necessary, and also when need be, when you are supposed to make presentation of your tax, you have all your record in order. Now, the main conclusion, a key point of this whole tax policy is keep records, separate your personal account from your business account, and keep record again. Records would be very important because it's not like they are going to start chasing everybody or monitoring everybody's account. You are expected to present your tax information and pay your tax by yourself. It's in rare situations where you are made to go under the microscope. That is when those transaction details and all these numerous things people are talking about comes into play. But ordinarily, nobody's going to deduct money from your accounts randomly. So, bottom line, if you are running a business, ensure your business is registered as an LLC. If you are not a business and you earn a salary or whatever, these are the issues. There's nothing really to panic about. So for more insights on stuffs like this and more updates on finance, follow me on TikTok, Trade Expo. Follow me on Twitter, Trade Expo. Follow me on YouTube, Trade Expo. It's Trade Expo everywhere. Also on Facebook.